Good morning, children. Welcome back to the online session of Sri Gokulam Public School, Guruvayur. Children, in our previous class, you have studied about the calls in arrears. We saw that when shareholders make a default in payment of any of the allotment or call money, it is transferred to a separate account known as calls in arrears account. Now let us discuss calls in advance and do the problem related to this case.
The next concept related to this topic is calls in advance. So calls in arrears means unpaid amount, but calls in advance means you have received the money before it went into due. Okay, so a company may, if its article of association allows, accept the money against the call or calls not yet made. So we have not yet made that installment, but some shareholders are making that calls in advance. Okay, so the money amount so received in advance is credited to calls in advance account. Now look at this disclosure of calls in advance in the balance sheet. The amount received that is not yet due is a liability on the company. It is shown in the equity and liability part of the balance sheet. Remember children, advance, if you are receiving something in advance, that is your liability. Okay, so that will be shown under the equity and liability part of the balance sheet under the main head current liability and the subhead other current liabilities. The journal entry passed to record calls in advance is, what is the journal entry? Bank account debited to calls in advance account. If you remember the entry for calls in arrears, you may have noted that calls in arrears was debited, but calls in advance should be credited. Okay, so your journal entry goes this way: bank account debited to calls in advance account. Now let us do one problem. In this problem you can find calls in arrear as well as calls in advance. Both cases are discussed. So the Kerala Coir Mills Limited, with an authorized capital of 5 lakh, equity shares of rupees 10 each, issued. The Kerala Coir Mills Limited, with an authorized capital of 5 lakh, equity shares of rupees 10 each, issued 2 lakh equity shares payable rupees 3 on application, 2 on allotment, 3 on first call and 2 on second and final call. So when you add these installments together, how much you will get? 3 plus 2 plus 3 plus 2, it is 10. Okay, so the amount due on allotment was received. On the first call being made, one shareholder holding 6,000 equity shares paid second and final call along with the first call, while 5 shareholders with a total holding of 10,000 equity shares did not pay the first call on their equity shares. Company has not demanded the second and final call. Pass journal entry to record the transaction and draw of the company's balance sheet. So let us summarize this problem first. How much is the issued capital? It's 2 lakh. How much is the face value of that share? That is nominal value, 10 rupees. And what are the installments? That is application 3 rupees, allotment 2 rupees, 3 on first call and 2 on the second and final call. Now, till allotment you have received the whole money. But on first call, that is of 3 rupees, first call being made, when the first call was made, one shareholder who was holding 6,000 equity shares paid second and final call. So along with the first call, he is making the next call also. Okay, in advance he is making the final call along with the first call, while 5 shareholders, there were 5 shareholders with a total holding of 10,000 equity shares. So in total 10,000 equity shares, they have not yet pay the first call on their equity shares. So it is on first call we have received advance also, and there is arrear also in this case. So when you are doing the first call, you have to be little careful. Okay, now company has not demanded the second and final call. So here till this date the second and final call is not yet called by the company. Okay, pass journal entry to record the transaction and drop. So let us pass the journal entry first. First two entry, as you know, it's related to application. So the first entry is bank account debited to equity share capital account. As I mentioned, how much shares was issued? 2 lakh. And how much it is payable at the time of application? 3 rupees. So 6 lakh is the you have to collect during the first installment. So bank account debited rupees 6 lakh to equity share application account 6 lakhs. Be in application money on 2 lakh shares at the rate rupees 3 per share received. Okay. The next entry is you are transferring this share application money to share capital account. Equity share application account debited to equity share capital account, that is 6 lakh. Being application money transferred to equity share capital account. So this two entry of application is passed. Now next two entries related to allotment. Okay, so the due entry related to allotment is equity share allotment account debited to equity share capital account. How much share is issued? 2 lakh. And what is the price? How much are you going to collect from allotment? It's 2 rupees itself. So 2 lakh into 2, you will get 4 lakh. Now received journal entry, bank account debited to equity share allotment account. So 2 lakh into 2, that will give you 4 lakh itself. So same amount you can post over here. This is the due amount and you have received the whole amount. Okay, so the 2 allotment installment is finished. Now we have to move to the first call account, which is due. So equity share first call account debited to equity share capital account 2 lakh. And how much is the amount you are going to collect during the first call? It is 3 rupees. So 2 lakh into 3, that makes 6 lakh. So actually you are supposed to receive rupees 6 lakhs towards the equity share first call. But now the next entry is a entry where you have to be very careful, because there is arrear as well as advance in this case. So if you look into the question, you can see that how much is the advance you have collected from 6,000 share. 6,000, one shareholder who is holding 6,000, he is paying 2 rupees of second and final call. So 6,000 into 2 means you are receiving 12,000 extra from that shareholders, okay, in advance. So here you can see that the entry which you have to pass is bank account debited, calls in arrears account debited. Why calls in arrears? Because you know that in this entry a total of 10,000 equity shares, they have not paid the first call account. So this is the arrear and 6,000 is the advance. So moving into the solution part, bank account debited, calls in arrears account debited to equity share first call account to calls in advance account. Here in calls in advance arrear, you have to show, that is arrear is related to 10,000 shareholders. So they have not paid the first call, that is 10,000 into 3. 30,000 we have not received, and the amount which we have not received we have to show under the calls in arrear account. And you can see here calls in advance is from 6,000. One shareholder who is holding 6,000, from him 2 rupees on final call is received in advance. That means 6,000 into 2, that makes 12,000. So 12,000 you are receiving in advance. And how much is the equity share first call? That is 6 lakh. So 6 lakh you can write here, and add this together and subtract 30,000, what is the remaining amount? That is the amount which you have received towards equity share first call account. So this is how you have to pass the journal entry. So children, let us conclude today's class. Today we saw how to do the journal entry in case of calls in arrears and calls in advance. The journal entry in case of calls in arrear is calls in arrears account should be debited to relevant call account, and in case of calls in advance, the journal entry is bank account debited to calls in advance account. So children, I hope you will do the problem related to two of this concept and attend the test paper which is attached along with this session, and see you in the next class with the new topic. Okay, so till then, goodbye, take care.